Good evening, ladies and gentlemen. Michael Silva here. Today's August 13th. You're watching the Stock Market Brief Show. And tonight's episode, well, I didn't want it to unfold like this, but it did finally happen. We got ourselves a follow-through day. Confirmed. And it was supported by a falling dollar and falling yields. Price held steady within this wedge structure with no shakeout so far, which is not something that I want to see, making it crucial to watch for key elements as we re-enter these markets. Now, these follow-through days, they can fail. They're known to fail, but it's important to remember that no bull market has ever started or reignited without one of these. So in tonight's video, I'm going to also dive into the expected moves for CPI going into tomorrow, follow up on some of the warning signs, grade this overall follow-through day, cover the extended bounces in mega cap stocks, and plus as a bonus, I'm going to be giving you an inside look into some of the stocks that I'm watching from my tight list that is typically just shared with my Patreons in the Discord channel, which if you haven't seen that yet, there's a link in the pinned comment below, and you can get more information there. Let's dive in. Welcome back to the show, everybody. So take a look. It happened to be day 6 to get our follow-through day. And yeah, I didn't want it to unfold like this. All right, so first off, if you don't know what this follow-through day is, what is it? Well, we see the attempted rally in day 347. We look for the follow-through day. The follow-through day needs to be 1.2% higher or higher on the day, and we have to see more volume than the prior trading day. Check, check. That is our green follow-through day on day 6 of the attempted rally. And this happened to be taking place throughout the day on some very bullish market net flow, which is to be expected. I wouldn't expect a follow-through day to come without seeing a move like this in market net flow. The green line just was up pretty much throughout the day. We had a couple of hiccups here on some Fed speak, and then the red line, which is the cumulative net premiums for puts, was flatlined, and we had convergence through the majority of the trading session. Now, before we get into key levels, it's important to note that we do have CPI tomorrow. And this is important because this is what the market's been anticipating and waiting for. It's been creating higher volatility in the markets. We're seeing larger swings. Today, we finished outside of the daily expected move, which happened to be around $5. Today, going into tomorrow, we're looking at another roughly $5.30 expected move for the SPY, which will give us this upper level, lower level here. And these are the two standard deviation moves seen on the screen right there. Now, why am I saying that this is not why I really wanted to unfold like this to see a follow-through day? And more importantly, not why I didn't want to see it. That doesn't really matter. It happened, and it's important of how we react to this and respond, and then where to look for potential fails. So on a move like this, on a gap up and it starts to move up, we talked about how things were getting very tight here, and whether we see a break to the upside or break to the downside, we can see an expansion. And that's what we got today, creating that follow-through day. Now, the reason why I'm not a huge fan of this look is simple, because we didn't really get any shakeouts or any moves back down. It's been kind of a one-way ticket up, and it's not really typical to get a V bottom recovery, especially during times where we're looking, where the Fed has been tightening, right? Like if you go back to COVID, the Fed stepped in full blow infinity QE, and the market recovered quite fast. So we haven't seen any sort of shakeout thus far. So we got our follow-through day. This is typically where we look to add exposure into the markets, where you're looking to add in slowly to the SPY, the Qs, SSO, QLD, whatever the case may be. It doesn't mean you go from 0 to 100 real quick. It means that you can probably look more north of, hey, 30% exposure, and if it holds, we can continue to add more. That's how I approach it. Now, where are some levels to potentially invalidate this? On this move, I'd be looking at yesterday's low. If yesterday's low gets invalidated, that would be a level that I would say, hey, careful here, because if that were to take place, it may happen on what's known as a distribution day. And a distribution day would mean we're having a day that's down, right? So we'll call it we'll draw it out a red day, right? A red candle, red day, not higher. It's going to be lower than the prior day on more volume. So that would be a distribution type day. And if those start to build, and we start breaking down from this low, it doesn't invalidate the attempted rally. It invalidates the follow-through day. Okay, so this low is the established low here. That's our first follow-through day. And if we continue to see some more follow-through days, that is actually bullish. What would be a continued follow-through day? Another day of 1.2% or higher on higher than the prior day's volume. So that would be a positive sign. I think you would need to be more cautious if we start breaking this low. If we start breaking this low over here, then it says, hey, I might be 30% exposure in the markets, but I'm not going to be adding any right now until I start to see some more follow-through days start to build up. That's how I would be approaching this. That's how I am going to be approaching this particular setup. Now, the reason, once again, like I said, I'm not a huge fan of the look of this is simply because of just this kind of structure that's been building. It's been kind of just grinding higher. And that's, like I said, it's fine to see happen. I'm getting more exposure in the markets. I'll walk you through some of the charts that I'm looking at. But it's also happening not only in the wedge structure, but we have the CPI print tomorrow. Okay. So, and this is a binary event. Congratulations, right? We can literally be moving $5 down, $5 plus potentially down if it's a 2 standard deviation move. And on the flip side, we can get some continued follow through. So it's good to get some more exposure back in the markets if you even removed any. Because on this big hit down here, we said if you're like an investor, right, and you're looking out 10 years, 20 years, I mean, these are the opportunities that you can buy. And because you don't care if it comes down lower, you probably look to add a little bit more if you're doing long term. Now, if you're swing trading and it's more medium short term, this is where our sweet spot is, where we start to really watch the technicals and the follow through days in these markets. Okay. Now, with that said, if we go into the 15-minute time frame, we've been talking about this prior swing low. Right? We didn't really see a prior swing low since that point. That was the main last prior swing low. And we're seeing a series of higher lows, which we talked about. That's positive. Back above the 5-day moving average. That's positive. Higher highs in the short term. That's positive. Okay. So if we do start getting hit, remember, like I said, the low to watch would be this one right over here. That's the August 12th low or August. I can't quite see that. I think that's the August 12th low right there. Yes. Which was the prior trading day's low. We had this tight consolidation, which we marked out yesterday, and we broke out and we followed through, and we're not too far off the upper weekly and upper daily expected move. So if we get continued upside and we get outside of the weekly expected move, I'd just be patient. I'd be cautious up in this area where we can potentially chop around. Typically, when we get to weekly expected moves, price tends to doodle around in these areas. It might jump from it and pull back in and gets a little bit choppy. If we significantly break through the daily expected move, then I'd say that it could be a much more impactful move outside of the weekly expected move. But that's just, we have to wait until what the market sees as far as that data comes out. Now on the downside, right, we have 536.74. That's a lower daily expected move. And that, to me, if we even pull back into this area, or if we pull back a little bit more and then we come back into it, this to me would be still above a rising 5-day moving average, and it would still be above the prior swing low anchored volume weighted average price, and definitely still above the anchor volume weighted average price from the August low here too. So on a move down, on a shakeout, it might shake out some people. If that's the case, we can always wait for it to reset back up and feel a little bit more confident. I think if we just start taking out the lows down here, which would be breaking the 5-day moving average, and it would be breaking the swing low anchored volume weighted average price, I think that is where we just need to proceed with a little bit more caution. Doesn't mean that you have to stop out of everything if you add in, say, 30% to the markets, but what I would be doing is refraining from adding more until that strength shows back up. Now, where can we potentially watch for the market to potentially see much more buyers step in? I did find it interesting that if you look at the CTA positioning, this was at highs there in earlier July or mid-July, and it came off hard and fast with the sell side activity. So if this starts turning back up, what are some key levels? And looking at gamma, I would be paying attention to around the flip line and obviously 5,500. So this zone in here, right in about this space, which you can see we're coming back into that gamma flip line. This is where, like I said, buying, people buy the dip, they sell the rip, buy the dip, sell the rip when you're above that line. When you're below it, you can see selling into selling, buying into buying, and you get much more volatile swings. So we're kind of coming into this 50 to 60 point range in here, which I think is going to be a critical point in the markets to kind of overtake. So this right here would be a zone of resistance that I'd be paying very close attention to. And if we can get back above 5,500, to me, that signals that this thing could potentially start turning around and we could start looking for more triggers for buyers to step in. Now, if I want to grade this specific follow-through day, right, I'm already telling you why I don't kind of like it, how it's in the wedge structure, how it happened going into a CPI report, which is not the greatest. But it is what it is, right? You got to still get in. You still got to be able to manage and and trade as time progresses, right? There's always going to be a new report. Even on Friday, we have retail sales, I believe it is. But on this follow through day 2, you got to look at various stocks that are setting up. And if I look quickly at the new highs, new lows, this follow through day in the NASDAQ composite or the NASDAQ 100, right? You can see we saw the strong move. We saw, closed near the highs. But if you take a look at like the new highs, new lows, this is actually negative. So you're seeing more new lows than you are seeing new highs happen on this specific day. And that's not the greatest sign. And you can also look at something like the 52-week high low and run a scan for new highs. And I'm looking at mid cap plus, and there was like 59 names. And the 59 names that created new highs today, I'm looking at industry like gold, right? So basic materials, which is more of a safety type thing. This is a minor. And then we have consumer cyclical, some healthcare names, financial, energy, healthcare. It's not really the growthy names that have led it. Typically, in these type of environments where you get these follow through days, we did see semiconductors, which is a growth sector, outperform the market today. But they're not. They're bouncing from some pretty extended areas from the downside. Another note here is looking at the Nasdaq composite and dividing it into the total put to call ratio and applying some moving averages. This is known as the old full indicator. We did get that crossover. Now, this hasn't updated for tonight, but we did have that bearish crossover, right? It's sold off, and we're seeing a bounce back. And this does take me back to August of 2023, where we crossed down, we sold off a little bit, but then we had this monster bounce back up to and around these prior highs. And then this never really changed. It continued to trend down, which is a little bit of a warning sign there. And you can see we had those 3 waves of this correction in the NASDAQ composite. Over here, you can see that we had a sell signal, but it was rather choppy. So I don't really want to pay too much attention to the chop there. And then you can see when we did have a follow through day, probably around this day, and we also had this activate as a buy signal. You can see that it held all the way up until around this point here. So it's a lagging indicator, but it gives us an idea, just to be an idea of where the trend potentially is. Okay, let's look at a couple of things that we followed up on yesterday's video. For example, some of the warnings, and they're still all valid, right? This is looking at USD JPY. And the reason why I'm talking about this, right, the yen carry trade, a lot of people have been talking about the correlation that it had with the NASDAQ, how it broke down, the NASDAQ followed. Look at the correlations, they come and they go, right? So currently, right now, it's positive correlation. The market's responding with the move here. So the thought here is if this is just a lower high and this comes off, is the correlation going to hold and put pressure back on the markets? I think that that's a valid concern. I don't know if it's an active signal to be able to act on right now, but I think that that is a concern still valid. And if I just take a look at Japanese yen futures, you can see that we talked about how it came a huge move off and to consolidate it just from a technical basis. If this wasn't the Japanese yen futures, if this was just a stock right now that I was looking at, this would be on my radar to potentially play more to the upside. Just hands down, because it's a nice little flag formation and it has a good amount of risk here. So if you played from here to up here, I mean, that's a good trade from a risk to reward standpoint. I don't know if it's going to play out to the upside, but I like the risk. And if that is the case and this goes up and obviously the pair trade comes down, does that mean that the correlation is going to continue to be holding where it's at? And we may see the market obviously continue to correlate positively, which would mean it would come in. I don't know, but I think that that's once again a valid concern. And as this is happening, the dollar, right? The dollar fell today, right? So this follow through day happened on a pretty dramatic move on the dollar based off of the PPI report. Not only the dollar falling, right, which you would think would help various commodities like gold. Gold barely moved. I'll show you that in a little bit. But dollar breaking down here. And then also the bond market, right? So the yields fell off, right? And this typically, these two together have had a strong correlation, meaning that if the dollar comes off, bonds come off, it's been actually typically, or the yields come off, it's been typically good for growth names. And that's what we kind of saw today. So to think, hey, if this starts bouncing, if the dollar starts coming off of these oversold conditions, does that mean that it's going to go stay in this positive correlation? And the market's going to come in a little bit and digest this recent follow-through day. I think we'll have more clarity on that once we get through the open of tomorrow and we get this report of the CPI data. Okay, now as that's also taking place, we talked about the bonds the other prior trading session, and these have been moving up too, which if you can look at TLT, you can look at something like ZB, and I think that this also poses a threat still if they continue to press higher and higher as more of a flight to safety trade, which we discussed more in the prior video. So those are some of the things that I'm just keying in on and watching very closely as I'm starting to add a little bit more exposure back into the markets. Here's gold. Gold was down slightly on the day on the big move down on the dollar. So that's a little interesting right there as it's kind of just consolidating near its all-time highs though. Silver was down on the day, but it did reverse from the lows to close at the highs. And I found that to be interesting because there's a tight correlation between silver and the miners did finish up 1.3% looking at the GDX. And the reason why I'm bringing this back up is because in a prior video a while ago, probably over around this time, I talked about a short position in the miners, and I closed out a little bit on this day, and I closed out a little bit more on this day. And I think on this day, I was pretty much out of the position. And now I'm looking to see if I can reset back up. And now I didn't short the miners. I didn't short GDX. I shorted DUST, right? Which is a 3X, and my short positions, they're smaller. And then if they're 3X, they're even smaller than that, right? So we're starting to get a pretty reflexive bounce back. And it brings me back to this chart that if you look at the correlation, it's pretty much always a high positive correlation. And you look at silver, you look at the miners, and they kind of move hand in hand. So when I start to see things like the miners start to take off to the upside and silver is just kind of just doodling around here or putting in a lower high, that to me is a little bit of a warning shot on this run and potentially signaling just a higher low. Now, there's a lot of miners that look pretty good, and you can look at this and say, oh, it's just kind of this bullish megaphone pattern, and we're going to go for the run. That's very possible, absolutely. But I can see the case that if silver does come off right a little bit more here, come to retest these lows, and this is just a continuation, I think that this could very well find itself pulling back a little bit, which could make for a good shorter term potential short trade in miners. But you would be also have to note that you'd be fading strength, right? You'd be fading a good move in the markets, and some of these names do look good. So I'd say proceed obviously with caution on something like that. Overall, though, I think that covers really kind of what it is that I'm looking for as far as the follow-through day goes. The key level to watch if we start to see it. Now, remember, I want to reiterate this. You'd want to see price close under this low, right? It can come retest it. That's totally fine. It can undercut it and then close higher. But you want to see it close under this low. And that's where I'd say, okay, maybe I'm not going to continue to add here, but I'm still good because this low hasn't been invalidated. But I would prefer not to see a close under this daily candle right here as it stands in this current moment, okay? So just to clarify that. Let's go ahead now and hop into some more individual stocks that I'm looking at that are setting up and kind of go through those. Okay, so we're going to look at some of these names on the daily charts here. And they're in no particular order right now, but I'm just going through some that have been holding up rather well. I'll go through some that have not been holding up rather well. This one right here is QTWO. And as you can see, we have the 20-day rising, the 50-day rising, the 200-day rising. Earnings has already passed. We saw a bullish move, but then it got hit to the downside, potentially moved that way with the markets. But overall, it's recouped it, and it's kind of just been consolidating. We saw some strength today. So are we going to get continued move and potentially retest these highs? That's a possibility, and that would be something that I'd be looking for. You can say it's kind of just in this bullish channel over here. And we're just trading in and around that level where you might have a stop under this prior low or even this low to potentially play it up higher. So I like the look of this as it stands in this current moment. If this follow-through day in the S&P 500 is going to continue to hold. SH, so Dash is familiar probably to some. We did come to close this gap from the prior earnings move. And then on this earnings move, we came way down, but then we closed way up. Price action consolidated. And today we had a nice little breakout here. So if you are trading something like Dash, I'd say have a stop under today's low and play for a continuation, or the prior day's low to play for try to get up back into and around this prior high for a year to date. So I just like how we've seen the strength. We've seen the consolidation. We had some follow through of that today. If I take a look at Cube, this one right here has also been on my tight list, and you can see that we're kind of just pulling slightly above this prior year-to-date high, and we've been consolidating here very tightly, and we're holding this kind of low zone here. So if you're playing for a breakout here and you're playing just a measured move, it'd probably be into this 52 to 55 range here, and you'd have your stop right down and around this range, or potentially trailing the 50. Or if you get out, if it comes stops you out, you can look to get out early and reset up the trade if it starts turning back around, and that's what we call kind of just a U-turn trade. Okay, SHW is not too far off its highs for the year here. You can see that we kind of overshot it a little bit here on a strong move. It came back into the 20-day, started consolidating here nicely, and today we kind of broke out of this tight consolidation here. So if you do enter into something like this, maybe a stop under today's trading low or the low below that, and play it for a continuation move to the upside. So that's a Sherman-Williams. This one is not strong. It showed a new 52-week low. This is Mobileye, but I do want to call out a couple of these names for bottom feeders, right? The people that try to catch bottoms. The RSI is pretty burnt to a crisp. You can see it's turning up a little bit as the market just pressed in a new low. So these names potentially might see a little bounces in the near future, but you got to understand something very, very important about names that have been beaten up. When they start to move up, if they start to move up, one, these are high beta names, so a move just to right here would be 10%. You need to be aware that the trend is currently down, and it would be a bounce in a downtrend. So these ones typically would require smaller positions, in my opinion, and they're more of a fade type of trade, a bounce trade. And you really have to manage your risk, because if it invalidates it, they can continue to fall. Like when this broke down, like if you were like trying to buy the dip, like you would have got destroyed here, just completely hammered this entire time. Or if you play this little breakout, see how this broke out, but it was in a downtrend. The 50-day was sloping down, 20-day was flat, but the 200-day was down too. You play the breakout and you're like excited, but then it consolidated and then it continued to break down. So you have to be a little bit more aggressive as far as getting in and out of these positions. VIRT. Nice little flag over here on earnings. It consolidated and we saw a break higher. So to retest this 29 to 30 range, potentially here, looks quite likely. But I like to see the strength in a market that has been pulling back. And if we get continued strength in the markets, perhaps it plays with it and continues its ascent to the upside. So you have this strong move here. You have a bullish flag. If this is going to play, a measured move could be up to and around that 31, 32 kind of range here, potentially even more, but that's what I'd be looking there. 3M, had its, strongest move in history over here. And this one has technically been working pretty proficient, meaning that we've been seeing consolidations, boom, bases build and breakouts. And this happened to be on earnings. And if you are a trend follower, one of the rules in trend following is strong stocks get stronger, weak stocks get weaker. So I would be looking for a retest of this high at some point, especially if the market continues to hold up. So I think that this is a good name to potentially look for exposure into. It's a big name, right? We did see this gigantic move and it's just kind of been consolidating there. And if it does continue, we could bring up, maybe 134, 136 for a measured move of if this is a flag and it plays out. But I do suspect that we'll retest this high at some point. And that's kind of what I would be eyeing in on. DVA is another one that's roughly at the highs for the year, DaVita. And I would be just probably marking it right here. Now, I wouldn't be looking to enter into something like this immediately because of the strong move that we just saw. I would prefer to see this consolidate a little bit or come up and then consolidate a little bit more, wedge, flag, whatever the case may be, tighten up and offer a better risk to reward. So that's be something that I'd be looking at there. PFE, Pfizer is one that was put into the trade ideas. I've been monitoring this wedge pattern. Now, this is a tricky one because we've been seeing some strength come out. We've been seeing some consolidations and breaks. And today we did see some nice volume on the break here. But I think you got to just manage the risk. And if it gets back under the 200-day moving average, closes back below the 200-day moving average to be more clear, I think that that'd be a fail breakout attempt. And we'd have to just give it more time. The 200-day, right, as we're trading above here, it's going to start flattening out, which is positive. But it is still declining here, and that means that any move higher should be considered just cautious because it takes a while for these things to start to flatten out and turn up. The 50-day, however, which we closed basically on, is flattened to slightly up, and then the 20-day is starting to turn back around, which is the more shorter term average. Okay, continue on. DYN to Dyne Therapeutics. This is up massively on the year, and it's just floating around these highs. I don't know necessarily I'd be, too interested. I don't know if, it's worth squeezing out a little bit more, but if it does start breaking, you can potentially have a tight stop. But that is one that's just kind of been on my watch list. EGO has been another one. This is Eldorado Gold. This is, one of the gold miners that have been, bouncing with the markets, and it's kind of just right there at year-to-date highs. I would prefer to see this also consolidate a little bit there too. Another one that's been getting beaten up is Charles Schwab. And Charles Schwab, I actually traded it right over in here, and I played a bounce, not all the way up to here, but I played it, I think on this day, I basically got out of the position. But I did want to call out that, it's coming back into this prior low. It's actually tested it once, tested it twice, tested it again, and the bounces are getting smaller, which is actually not a good sign. Okay, because it can technically break down, right? The bears are making progress. However, if you look back, right, and it's kind of bounced in this zone before, it has a positive divergence building. So maybe if it does take out this high, that would be its first higher high in this sequence, which could maybe try to come back up and test this, and it could be considered a double bottom, maybe triple bottom, whatever. But it would have to break this high to actually be a technical like that. So not seeing strong relative strength here, but I can see that maybe people might be looking at this with the positive divergence on this very tight trend right here, wedging. If financials get a little bit of reprieve, maybe this opens the door for a little bit of a pop in something like Charles Schwab. EXR, which is very similar to Cube, CUBE, did start to break out over here out of this little consolidation pattern. It's above the 20-day. So if you're trading this, maybe you have a stop below the prior day's low. If you want to dive a little bit deeper and open up, a smaller position to play it up a little bit higher, you can consider just managing the position as such. A couple of other names that I find interesting. I mean, there's some energy names in here. This one went a little bit too far. That's SU, so I'd be waiting for the consolidation. But it is right there at about year-to-date highs. NEE, which is a utility name. This one followed through after some little consolidation here. And I think that a retest of these highs are likely at some point. So this is one that I'd be watching for. You can potentially call this a little cup pattern with a handle right here. So maybe if it comes back up into this area, I don't know what the path would look like, but if it tightens back up and you break this base, at minimum, I'd be watching that $80.50 per share level. But if you want early entry, I'd probably have a stop under here and then watch to see if it goes up. And if it comes back down, it doesn't invalidate the cup with handle at that point, but maybe it needs more time to potentially set up. So that one's been on the radar. We talked about that one yesterday. FLR is another name that's in bullish context. And we have 4 trading days here of trading pretty tight. Volume's kind of been drying up here. And it's just in this bullish context, somewhat of a flag pattern. You had a little bit of a shakeout here, but right now it's been getting rather tight these last 3 trading days, trading within that day's candle. So a break above through this, I'd say 49, 49.50-ish kind of area over here. That could produce maybe a retest of these prior trading highs there with minimal risk. Another one too is T, which is AT&T. This is a name that we traded back over here. Then it flagged out over here and we watched it. Earnings kind of shook things up a little bit over here. I believe that was the day prior going into earnings. But now, we're not too far from the highs from a year-to-date perspective. Earnings is out of the way. It's in a bullish trend, right? So if you're a trend trader, this could be another name, right? If strong stocks get stronger, we can potentially retest these highs and continue this trend to the upside. So that'd be another one I'd be watching close attention to. IMAX, which is like the theaters. Also, interesting setup here. Right, IMAX is a little bit lower volume name, but it still trades, I think, enough volume. And we had this big base over here, and it recently broke out, and it broke out on earnings. So the market liked what it saw. It saw continuation to the upside, and now we're getting a little bit of a digestion. And the pullback here is happening on declining volume. And that's a positive sign to see. And today, if I zoom in further, was an inside trading day. So I think that this could be a potential make or break here of this move. So if we start breaking above the high of today's trading session, perhaps maybe that opens the door for a pop higher, like we talked about on some of those other names. What was the names that we did that on? Was it Sherman-Williams? For VIRT, I think, where we saw, earnings move, follow through, and it came back in, right? And then we started moving a little bit higher. This was actually not an inside day, but it was an outside bullish day that closed at the highs. So pull back, light volume, and then we saw some follow through. I think that's something like a similar type look as to what we're looking for here. But it was an inside trading day, so we'd have to respect it if the low's broken or closed beneath us. And if it does, maybe watch the 20 days, see if it sets back up at that point. But you don't want to catch this and then all of a sudden it comes down here to you don't want to hold it, down here. That would be, an 8% move to the downside, or 10% move to the downside, versus if you play a breakout and you have a stop here, that would be your risk, which would be 2% or whatever, and then potentially play it to the high, which could be 7 to 8%. So I like the look of the chart as it stands. KO, Coca-Cola, nothing new over here, right? We saw this big breakout, and now price is just digesting here, getting very, very tight. So an explosive move here in the near future seems likely. And remember, it's in bullish context, so strong stocks typically get stronger, retake that 69 level. I don't know if the path would be straight to that level or if we want to come back down and see if it resets up and consolidates. Okay, that's always a possibility too. But if you do play the breakout, you at least have an idea of where you can potentially get out if it closes below those levels. Duke, so another utility name, is also holding up rather well here, just consolidating in bullish context. KMI, Kinder Morgan, we did get a little bit more volatility here, but earnings has passed, and we saw a nice move there, and we're kind of just consolidating, trying to reclaim the 20-day moving average. In the last 4 or 5 trading days, price is getting tight, so a retest of this high. If the market wants to continue on, this could be another name to potentially look at. So Southern Company, that was mentioned in last night's brief too, bull flag context, sitting at around highs. This is a utility play. Also another one to just kind of keep an eye on. And then the dust trade, which I was mentioning in earlier in this episode, it doesn't, from a technical standpoint, it doesn't look bullish at all. But for a fade trade, remember we talked about, I played it over here and I played it up into and around, I think right over into this range, which ended up being 16. No, I don't know where I played it into. I think my highest point was 24 to 25% of a gain. At least that's what I remember screenshotting and sharing. But we are pulling back, into these levels. And if I look at the 15-minute time frame, right, you can see it's pulling back in. And if silver does start to, consolidate where it's at or pull back in, maybe perhaps that does mean that miners would look to, pull in a little bit for a short-term, trade on something like DUST. And once again, this is a 2x bearish fund. So that means you would want miners to go down for this to go up. When I approach these, my short positions are always smaller than my long positions. Always, always, always. That's always going to be the case, because it's a lot easier to make money from the long perspective. And when you're short, you got to be kind of quick and aggressive. So those are some of the stocks that I'm looking at. I want to also now touch up on some of the larger market cap names, and they've been making pretty extended runs. So we talked about how the market, it's not exactly what I want to see as far as the follow through day goes, this wedging structure. And then I'm looking at the mega cap names because the SP 500 is cap weighted. So we're looking at the long ones. These things have been just on a monster tear too to the upside. So things like Apple does still look like it's in that wedge structure over here. So to see this pull back at some point or consolidate makes sense. And it has a strong correlation to the S&P 500. And when you think about it, it's like, okay, if I enter here, is that the greatest entry? Chances are, even if it goes straight up like this, there'll be a point where we come back to test at some point at some of these levels. So I think there's going to be an opportunity to see a higher low at some point in these names. Microsoft, right? We had some follow through here, reclaiming the 200-day moving average. Also kind of in that wedge structure here. NVIDIA has seen the larger move back to the upside, but we are coming into earnings here soon. This has been a strong move. So to see this digested, maybe retest the 50 and see how it consolidates, see how it tightens up in the near future is a possibility. Google, also very strong wedge structure. And these are, like I said, the larger market cap names. And I even think after hours today, some news hit the tape. I don't know if it's just a temporary thing, but it kind of got shook up a little bit in the aftermarket session. I didn't read what exactly happened, but it did come down about 2.5% or so. Now, in the 5-day moving average, a lot of these names have been recovering it, and the 5-day moving average is starting to kind of turn back up here too. Amazon also is right back at that 200-day moving average, and it is a uptrend of the 200-day, but you can see the move was pretty much straight kind of V bounce recovery, no shakeouts really. So to see some sort of a hit to the downside in the near future and see a higher low actually established, I think is likely. If you take a look at Meta's been holding up rather well. Some people might call this ascending triangle. I would prefer to see, if you're bullish Meta, for it to consolidate. But as it stands right now, I can see why people would also look to fade Meta after a move from this low to this high with basically no pullback, no nothing, would make sense too, as we're moving into where we saw prior supply as well. So to see this consolidate maybe 6-7 days, that would be actually pretty bullish in my opinion in something like Meta. Now, remember, CPI comes out, you can gap up, you can gap down, but I would wait to see that time pass before really executing into full size type of positions and so forth. So that is kind of what I'm watching there as far as a larger market cap name goes. Those are some of the trade ideas that I'm looking at. And once again, if you are looking to get exposure back into the markets and you got in a little bit, I would be keeping an eye. Let me activate this drawing over here. I'm gonna go like this and show you exactly where I'd be a little bit more cautious if price closed below, and that would be that day's prior low. So I think it's fine to get some exposure here, but if we start closing below this, the low is 530.95, so under 531 there. I'd be a little bit more cautious. I wouldn't say that it's out and done, right? I think it would just be a continued portion of this attempted rally, and this low would still be validated at that current time. That's all I got for you. We went over, a bunch. There's going to be timestamps obviously in the description. So if you want to bounce around and go back and re-listen to something, please feel free to do so. And if you haven't done so already, make sure to subscribe to the channel and like the video. See you later.